You're right. There's no denying that China is driving the global electric vehicle revolution. In fact, last year, 60% of all electric vehicles built and sold globally were produced in China. If we take a step back, that number was 1 million in 2020, 3 million the following year, and this year, production of electric vehicles, including Tesla vehicles, I've expected to reach 6 million. As a result, the Chinese are forced to match prices. According to Michael Dunn, CEO of auto consulting firm Zozo Go, Tesla has made cuts that are further pressuring their bottom line. Neo Liaoto and XPeng are bleeding out while holding on to this. Dunn also stated that Tesla appears to be convinced that aggressive pricing is the best way to succeed in today's China market, where demand is weaker. Cuts made gradually might put tremendous pressure on its rivals. To put things in perspective, a post from the automaker on the social media platform Weibo revealed that the price of the Model S was lowered by 6.7 to 754,900 yuan, or 103,477.58 from 88,900 yuan. And that the price of the Model X was lowered by 6.9 to 836,900 yuan from 898,900 yuan. And is noteworthy that Tesla has introduced less expensive versions of its Model S and Model X vehicles in the US, though these are not new issues. Rather, their range is limited by software. In its June quarter earnings, Tesla revealed operating margins of 9.6, which is the lowest operating margins the business has reported in at least the last 5 quarters. The company continues to prioritize increasing market share and driving up car sales at the expense of margins. The ongoing discounts alarm investors who are concerned about margins. Could decline too much in the wake of the price reduction announcements, even if Tesla's cuts have generated fears of a pricing war in the Chinese market that could affect smaller players. The company's shares are down roughly 3. Shares of Chinese startups making electric vehicles, NIO and Liata, all saw decreases in morning trade in the United States. The declines are a result of the Chinese economy's ongoing efforts to recover stability, following a period of stringent COVID-19 limitations during which customers remained frugal with their spending. Michael Dunn, CEO of auto consultancy firm Zozo Go, stated that Tesla appears to be persuaded that aggressive pricing is the best strategy to succeed in today's China market when demand is weaker. Cuts that continue over time might put tremendous pressure on its rivals. He continued, adding that the Chinese are forced to match prices, cuts on their own, increasing the strain on their financial position now. Buy margins are extremely narrow. XPeng and Neo Liaoto are barely hanging on. According to the China Passenger Car Association, Tesla sold 64,285 Chinese-made electric vehicles in July, a 31% decrease from the same month the previous year before the pricing of the Model S and Model X was announced. Price reductions for the Model 3 and Model Y were actually announced just a few days earlier by Tesla in China. Analysts believe that this action may set off a fresh round of price reductions for EVs across the nation. Tesla announced on Weibo that the pricing of the Model Y long range and Model Y performance have been reduced by 14,000 yuan or $1,934 USD. And the price reductions result in a 4.5% decrease in the price high model. Y long range to 299,941 100 and a 3.8% decrease in the price of the Model I performance to 349,900 yuan or $47,952. The entry-level rear-wheel drive Model 3 sedan hasn't been overlooked either. Local customers who pick up the keys or key card for the car can receive an insurance subsidy of 8,000 yuan or $1,098. To be eligible, the car must already be in Tesla's inventory, and the offer is only good until September 30th. Previously, Elon Musk stated that the automaker will take into consideration more price reductions, even though they would put pressure on its profit margins. According to Auto News, Chris McNally, an analyst with Evercore ISI, there is a chance that these cuts in China could lead to similar cuts in the US and Europe. Essentially, for background, Tesla has chosen to modify its Model 3 model. Why offer in China in an attempt to improve sales figures and guarantee a robust third quarter volume. Tesla hopes to deliver 1.8 million vehicles this year, but its Q2 earnings report showed that it generated $24.93 billion in revenue in the second quarter of the year. However, it noted production in Q3 will be slightly down due to planned summer shutdowns as it upgrades its factories. In Q2, Tesla delivered 466 140 vehicles and produced 479 700 vehicles. These cars were propelled in part by incentives and discounts, and their price was a little higher than many analysts had predicted. In order to meet its Q3 targets, Tesla recently lowered the prices of the Model Y long-range ad and in performance versions by roughly 1929.14 Chinese yuan, or 4.5% and 3.8% less than the entry-level Model Y rod, respectively. The performance of both Model 3 versions or done has remained unchanged for some time, and the model's basic specifications are the same as those of an early 2023 model. Although the price of the Model 3 is not changed, there is still good news for customers. Tesla has announced a time-limited insurance subsidy for Model 3 RWD cars from the current inventory, which essentially consists of cars that have already been manufactured but have not yet been ordered by anyone. Ordering the current Model 3 rear-wheel drive version will result in an insurance subsidy of 8,000 yuan, around $1,102, according to a large note at the top of the ordering page. The new Tesla Model 3 and Model Y are slated to arrive in China in relatively short order, 1 to 4 weeks for the Model 3 and 2 to 6 weeks for the Model. It's difficult to say for sure, but there's always a chance that the manufacturer plans to get rid of its stock before releasing the much anticipated upgraded Model 3, also known as Highland, which based on rumors and conjecture should hit the market soon, according to the China Passenger Car Association. Case 64285 Tesla Model 3 Model Y cars were shipped as wholesale in July. That's 128 more than a year before, but it's also the lowest monthly sales results of the year so far. Local retail sales were $31,423, up 271% from a very low base a year ago, while exports were $32,862, a huge increase of 66%. The majority of Mike's sales were accounted for by the Model Y. It's no secret that the competition in the electric vehicle space is heating up, but investors aren't so sure. In early July, 16 automakers, including China's Tesla and state-owned companies, agreed to refrain from creating excessive competition in the Chinese market, including abnormal pricing. These automakers formed joint ventures locally with major Japanese, US, and European automakers. While the largest economy in Asia experiences a slowdown, leading automakers to intensify pricing rivalry in new car sales, including those of electric vehicles. The rivals reached a compromise proposed by the Chinese government. A senior official of the Ministry of Industry and Information Technology who oversees automobile policy witnessed the company's signature of a letter of acceptance for maintaining fair market order in the automobile industry at an international conference held in Shanghai. The letter comprises 4 pledges, the first of which is to not disrupt the fair competitive order in the market with abnormal prices. The official in charge of the auto industry at the stated that the development of China's auto industry is facing challenges and that it is necessary to regulate sales promotion activities, including avoiding reckless price cutting. Notably, the 16 companies make up the majority of new car sales in the country's domestic market. These include large state-owned groups like SAIC Motor and China Fa Group, which have joint ventures with Japan's Toyota and Volkswagen of Germany Holding Group, a privately owned automaker that owns Volvo cars, local EV makers Biden and Tesla, and according to the official, car companies should also help to maintain a favorable market environment. Price competition has also been getting more intense for new energy vehicles like EVs, whose popularity is quickly rising in the Chinese market. The official said that this agreement is the reason behind Tesla's recent price increase. Many people viewed China's cuts as a contentious decision. Please subscribe for more.